Welcome back. You're still tuned into Halftime Report on CNBC TV 18. Let's focus on a couple of stocks within the pharmaceutical space which are making news. One was Aurobindo Pharma on account of compliance issues, and a lot of stocks which have come out with earnings recently. To talk more about this, we have Aditya Khemka, Fund Manager Healthcare InCred PMS, to give his view on the industry vis-a-vis specific stocks. So Aditya, hi, welcome to the show. Well, just wanted to start by asking you about, the compliance issues that a lot of these companies are facing. The key and the recent one is Aurobindo. What is your take in terms of where India stands and Indian industry stands when it comes to compliance issues? How critical is it in the larger scheme of things now?
Sure. So first of all, thanks for having me. In terms of compliance, I think the Indian companies now have been in the US market for more than 2 decades. It is slightly disheartening to see them continue to experiencing compliance issues. Yes, the US FDA CGMP book is a moving goalpost, and yes, the companies need to consistently keep a track of what changes FDA is making. Having said that, because they've deployed such huge amounts of capital for catering to the US market, one would expect companies to be compliant with the latest CGMP standards. So I think we have come a long way from where we were, let's say, 2 decades back in terms of compliance with FDA norms. But there is still, some work that needs to be done, maybe some more investment, some more automation, some more, proof reading that to be done of the laws to make sure that we are 100% compliant.
All right, Aditya, just hang there for a bit. There was some flashes on Paytm at the bottom of your screen. Problems continue for them. What sources tell CNBC TV 18 is that the Enforcement Directorate has initiated preliminary inquiry against Paytm Payments Bank. The stock down about 8.5%. Paytm, on its part, has replied by saying that we have always complied with the requirements dutifully, not accepting or denying the claim that ED has initiated preliminary inquiry against them, but acknowledging the fact that they've complied with requirements dutifully. Irrespective, the stock down about 9% has been a big decliner in the last few trading sessions. Meanwhile, Zee Entertainment is the one which is up 10% from lows. Nothing really in the numbers. Revenues were down 3%. EBITDA margins collapsed. We had, the company reporting a big decline in their profitability as well, but the stock rarely moves on fundamentals. Some news or the other keeps it afloat, and from the today's low, it has rallied about 10%, has surged to the high point of trade with a 5% uptick. But Aditya, we were speaking to you about the healthcare and pharma space. Today, all of them are not doing well, and this is on account of global weakness that we're seeing. IT and pharma are the packs which are not doing well. But otherwise, over just the last few trading sessions, we had seen some traction come back to the pharmaceutical space. So among the stocks that have declined today, what do you think looks attractive and should be looked at from a medium to long-term standpoint?
So I think in the pharmaceutical space, in the larger cap segment, there is very little value. Most of these stocks are now trading at all-time high PE multiples if you adjust for the one-off US opportunities that they're having, like Revlimid or Spiriva or whatever product opportunities these companies are currently tapping. But once these products genericize completely and there is not significant one-off in these products left, I think the base business of these large cap pharma companies is basically at all-time high multiples. But if you look at the mid and small cap pharma segment, there is a lot of companies with very sustainable businesses, good cash flow, which are still fairly undervalued in my view. And therefore, those stocks will continue to be good secular bets in our portfolio as well. Beyond pharma, in healthcare, I think hospitals and diagnostics, again, very little value to be offered in the hospital space. I think some of these hospitals are now trading at 20 times their replacement cost, which I think is not sustainable in terms of a valuation metric. And some of these other hospitals are trading at 2 times replacement cost, which I think is a fairly attractive multiple to get into. And I think the most attractive segment today within the healthcare space is diagnostics. I think they're trading below their historical average multiples, and business looks good as usual. And it's a high ROE branded business where we continue to place our strongest bets.
Okay. But Aditya, just wanted your sense, and coming back, to this entire issue when we are talking about compliance, a lot of the companies have started transferring key products, to other sites in order to mitigate the risk. Is that one of the reasons why you're not seeing as much of a correction? Case in point would even be Aurobindo, which has recovered from the day's low, that companies have started foreseeing this as a risk, as a tangible risk, and making the requirements necessary now.
Yeah. So look, that's correct, because most of these companies have realized that so you sometimes falter on compliance even though you don't want to falter on compliance. So the way to mitigate that is to have an alternate site or to have a site transfer available. But the issue with that is that when you do that, the cost of compliance goes up because the alternate site doesn't really stand idle, and if it does, then you have to bear the cost of that idle site. And with the prices in the US market constantly falling 2, 3, 5% on the base business, it just puts more pressure on the margins. But if that is the cost of compliance, so be it. So hence, if you look at our historical perspective, we have been saying that the US market has become structurally difficult to make money in, because one is the compliance issue, which pushes you to escalate your cost, and second is the price correction in the market, which is just always there. Sometimes it's 2%, sometimes it's 10%, but price falls every year in that market. So it's a very difficult market to operate in if you're looking at ROE or margins.
Okay, just a quick last question. Is GLP-1 and supplying, if it's amino acids or applying for the final product, do you think that's a tangible opportunity that people will be focusing on?
Look, GLP-1 is a great molecule, and in GLP-1 class, there will be a big addressable market in India. Remember, we are very fast becoming the diabetes capital of the world. But again, the problem is, what is the competitive intensity that you are looking at? Which are the companies whose brands will be successful? So that's as far as the Indian market is concerned. In the export markets, it is going to be about competitive intensity completely, because if you launch a GLP-1, if there are 20 other players launching it, nobody will make any money. So, it's all about competitive intensity in the export markets, and in the Indian markets, it's about the first mover advantage. So that has to be monitored.
Any way to play the semaglutide Ozempic sort of hype that is there in the world right now in India?
No, I don't think so. I mean, look, some of the MNC pharma companies are launching such products, but if you look at MNC pharma track record itself, over 40 years, they've lost 70-80% market share to Indian pharma companies. So there is a difficult job at their hands in terms of competing with the Indian pharma companies for the domestic market. So I wouldn't play that opportunity just yet.
I take that point, Aditya. Thank you so much for joining in. Always a pleasure speaking with you. With that, we'll step into a short break with the news that the Nifty Bank has now moved into the green. A good recovery is what we've seen, and as a result of which the Nifty too has moved to the high point of trade. We get in Pritesh Mehta with some trading strategies on the other side.